What up? It's your boy, Rusty Russ, back with that technical analysis video. In this video, we're going to be talking about how to perform technical analysis in the stock market, or otherwise perform various analysis on the stock market charts themselves. We'll be discussing candlestick patterns, various other patterns, technical indicators and studies like RSI, moving average convergence to divergence, or MACD, and I like money flow index. There are quite a few other ones, but those are the three that I use. Taking a look at volume, exponential moving average, simple moving average, and finally weighted moving average. So that's what we're going to be doing. Let's get to it. Alright, guys, so just to start, just like if you're pretty basic, you don't know anything about the stock market, this right here, I'm using TD Ameritrade Thinkorswim. It's a platform that I'm using. This is a program that I'm using. You can use all kinds of different various programs. But right here is the ticker symbol. The ticker symbol that I entered was BLMK, which is the corresponding symbol for Blink Charging Company. So they're the electric vehicle charging stations. So I chose Blink because I think it's like one of my favorite stocks, my long-term stocks. I think it's better than Amazon, really. It might fall down. The market's about to correct. It might fall down to $30, or if it comes anywhere in this range right here, go ahead and pick up as many shares as you can. Has a lot of growth ahead of it. Anyways, so let's go ahead and talk about how to do the chart. Okay, so right now, if you go right here, this is called the time frame. So right now it's showing 180 days, which is all of this, and 4 hours, which is each interval is 4 hours. Okay. So if we zoom in, this bar represents, if it's 4-hour chart, this bar represents the price, which is over here. See, 24, 22, 26. And this represents the day. So on Sunday night, Monday morning, pre-market hours, Blink traded between 227.48, which is right here, right? 227.48. And 23.59. So that's where it traded. Now, you might see these wicks, right? The wick represents the range. So right here on the candlestick, you see how it's a green candlestick? The green candlestick means that this is where it started the hour, or the 4-hour period, or whatever period you're looking at, and this is where it ended. And it's green because it closed the hour higher than it opened. The candle, the wick right here, means that it did in fact trade in that range. It just didn't close up here, and it traded somewhere in this range, and then opened here and it closed here. Here's the wick. So this is the range, this is the open, this is the close. The same thing for this. Since it's a red bar, it opened here and it closed here, and it traded in this range. Okay, same thing for here. Opened here, closed here, traded in this range. Okay? So that's what candlesticks are. So here at the bottom is the time, the right is the price. Okay, but this is kind of not enough information for us. So we're going to, see this little vial right here? It's like a science vial. It says edit studies. So go ahead and edit studies right here, studies. I like to first start with RSI, relative strength indicator. Double click, make sure it's over here. MACD, double click, make sure it's over there. I like to do MACD histogram crossover, 2 of them, see how they're on price. And then I like to do money flow index. And then I like to do exponential moving average exponential, I'll just type EXP. And then I like to do simple, so just type in simp, because you're a simp, just kidding. And then weighted moving average finally. Burp. Now we gotta edit all of this stuff because it's coming standard and we need to fix it. So histogram MACD crossover. So you're gonna touch the gear, and this one's gonna be our up signal. We can change the colors. I like to change them to something that I can see. I'm colorblind. I actually don't know. From negative to positive is that one, and this one. I just have them both the same color. Because I'm colorblind and it's just easier that way. And I can just look at the thing. Okay, the arrows. You'll see what would happen to the arrows. So this one is when it crosses from positive to negative. So let's change that from negative to positive and hit OK. So this one's negative to positive, yeah? This one already says positive to negative. So we need a negative to positive and a positive to negative. And I like to just make them the same color, and I don't even know what color that is. Okay, so those are done. Moving average exponential. I like to have the 15. That's just what I like. So moving average exponential. And what I did was I changed the length to 15. And that's all. And simple moving average just changes the length to 200. And that's all. And then moving average weighted. Again, we're doing 200. And that's all. And then RSI, MACD, and money flow index are fine. Go ahead and click apply. And then click OK. Okay, here we go. We got some bars. We got some lines and some things now, guys. I'm just clicking whatever. But the first thing that we do when we do our I'm going to teach you Fibonacci retracement as well. So the first thing that we do when we look at a stock that we've never ever seen before is we go to the 180-day 4-hour or the 6-month day chart. A lot of people like looking at a daily chart. I like the 180-day 4-hour. But you can look at the daily if you want. The daily means it ends in a day. That the entire gross period, that the last one is day. So that every single bar is a day. So see how it looks a little different. So some people like the daily. You can use the daily, the 1 year, 1 day. I like the 180-day 4-hour. Well, okay, let's just start with the 1 year, 1 day. Okay? You've never seen this stock before. What has it been doing? Well, this one specifically started at $1.55 over here, almost a year ago. And now it moved up to $64 and back down to $38. Okay. And remember, this is the price, the range that it traded every single day, because we're on the 1 year, 1 day, so every bar is a day. Okay, this line is the exponential moving average. Sometimes you see how it acts as support, and it kind of pushes the stock up. And then sometimes when the stock crosses below, it kind of acts as like a wall, nope, oh. And this kind of acts as this is the moving average. I forgot which one. Doesn't matter. Also, you can change the colors so you know which one they are, but I'm colorblind, so I don't. But this kind of acts as like a support, which means it usually can bounce off of this. And we see a reversal off of this moving average right here. It means that it's bullish. Bullish means up, bearish means down. Yeah, and then it crossed above this one too, which kind of meant bullish. Okay, and these are just various. It's just kind of a way that we can look at the chart and kind of see things. This is the volume, so higher bars mean that a lot of people bought and sold, but some people have the volume bars colored red and green. Just because you see a red volume bar doesn't mean that that's how many that were sold. That means you just colored it to the candlestick. That doesn't mean that all of those shares were sold. That's not what that means. So don't get confused. So this is RSI. This entire thing down here. It's not the price at all. It's just a relative strength indicator. And when this line is closer to this number, the higher number, 70, it's kind of telling us that this has run out of gas. Like, this is the gas tank. It's in like an inverse gas tank. We want this to be low, because when this is low, it tells us that this stock might be undervalued or underpriced rather, and that it has room to move. And then see when it's really high, it's kind of telling us, oh, it might fall far away. Okay, so check this out. You see the distance between here and this line? When the stock moves away from the moving average this much, it likes to come back down and check it before it starts going back up. But if you see a big ass distance between the moving average and the stock price, like see how it went straight vertical, it means that maybe that's a good time to sell. I mean, not if you're long, but it says that this is overvalued, and the RSI told us that it was. But RSI isn't always correct, guys. It's not like, something like the end all. It's just a tool we can use. Sometimes it's wrong. That's why we use all of this together, including fundamental analysis, which we'll talk about later, and understanding the overall macro environment. So right here. This is called moving average convergence divergence. This right here. So down here, it's not the price. It just means like when this one crosses this one right here. It kind of did. You can't see it. It did right there. And I put the arrow too, so that you don't have to squint. That's why you put the arrow there. It means that this stock could be bearish, which means it could go down when the top line crosses below. And I put the arrow up here so you don't have to squint. You can pay attention to the bars if you want. Oh, the distance between the lines represents momentum. Which you can understand if you want. You don't have to. Just know that when it crosses, it means that this could go down. Look, right here it crossed negative, and guess what? The stock went up. When that happens, when the MACD crosses, the MACD is king. It's not like RSI. Where RSI, it's kind of like, well, this could be true. MACD is pretty powerful. It's a little bit more consistent than RSI, especially on a bigger time frame, like the daily. Also, all the information that you look at is relevant to the time period, right? So a longer time period kind of gives you a fuller, what's going to happen in the next year, you might think, with this information, opposed to you look at the daily, the 1 day, 1 minute, for example, what's going to happen in the next couple of minutes. I like looking for the purposes of our options trading strategy, the 20-day, 1 hour. This is what I look like. So after looking at all of the big charts to make sure that the company's good. But anyways, so going back to the point, when the MACD crosses negative and the stock continues to move up, in contrary to the MACD, that is called a bullish divergence. It moved contrary to the MACD. That's a big deal. That means this thing is going to be bullish. So that's definitely a bullish indicator. This is money flow index. What I like to do is I like to, the lower that it's just like RSI, the lower the number the better, and it kind of represents volume. Lower is better. So I like to see low RSI, low money flow, and the MACD about to cross from negative to positive, and that's when I like to enter. But let's go ahead and look at the 180-day 1 hour to show you what I mean. So right here, you see the MACD crossed. We saw low RSI, and the money flow index was pretty low. All the lines, all of our conditions were met, so this may have been a buy. And then it goes up just enough for us to make money. Let's say we put our strikes here, and it goes up, and the trade decays, and we get out and make 20%. So it's really that easy. Sometimes, not all the time. If we do it right and we understand the risk, a lot of times it is that easy. But sometimes the stock market's rocky and we have to manage risk. But that's basically the strategy. So this is 180-day 4 hour, right? So as of right now, we're seeing that it's trading in a range. So we see the highs right here, the lows right here, kind of touched here. It's called a double bottom when it does that. When it kind of goes down and then goes back up and then goes back down but doesn't go lower than it was before. So double bottom, it's usually bullish. It means that the stock is headed up. And so we got a positive MACD cross, low RSI, but high money flow index. But anyways, we're seeing a lot of consolidation. Right here is kind of like at a breaking point. So we don't know which way it's going to go. I think it's going to go down short term because the market is crashing. Because big tech is at an all-time high and GDP numbers missed and the bond market is killing everybody. But that's what's going down with that. Okay, so now we're looking at Blink. It's not a bullshit stock. I mean, it did fall pretty much 50% from its high. It is volatile. Trades in a very big range. We saw the daily. We saw the 4 hour. So let's zoom into the 20-day. Okay, so the 20-day. So this is the range of what I like to do is I like to look at the 20-day 1 hour right before I make my options trade. So this is the high, and this is the low. That's a very big range, by the way. You really don't want to see a range like that. But this is the high. I mean, this is the high and this is the low, yeah? So what I like to do is I like to get in as the stock is trading near the low part of its range. So if the stock was trading in this range right here, and then the MACD was about to cross like it did here, or even here, and the RSI was pretty high in that instance, but even still, it crossed, and then it's kind of trying to make its way back above the moving averages. You know what I mean? Trying to break that wall, no longer make it as resistance, but a support instead. Then we put our strikes, maybe 35, 36, let it break, and then wait 20 days for us to be right. And then if it goes far enough ahead of our strike prices, we get out for 20%. So that's what I like to look at the daily. The 1-day I do look at, but not really. You know, I mean, it's really not so relevant. You can look at it if you want. Day traders look at this. I think it's stupid. And that's what's going on with technical analysis, guys. I'll have another video for fundamental analysis. Let's hope you watch it. Just in case you don't watch it, on every single chart that you look at, the very next step before you enter your position is to go to Yahoo Finance, put in the ticker symbol, followed by P/E ratio. Blink PE ratio. Now that number is more than 25. That stock is not worth as much as what it's trading for, guys. 25 is a very high PE ratio. We want to see the lower numbers better. So if you look at, for example, Amazon, and it's got a PE ratio of 99, that means it'll take 99 years for it to grow into 99 years of the same earnings for it to be fairly valued. It's a premium. A PE ratio is a price tag. So for some reason, the market accepts anywhere between 14 and 20. Like, that's a fine PE ratio. There's enough meat on the bone for people to think that stock is cheap. We're just in that day and age. And then you compare it to its peers and the growth it has ahead of it. But usually when you look at forward PE or price to sales, again, anything over 5 on price to sales ratio is anything over that is fucking crazy. Blink has a price to sales of 11 and it doesn't have a PE ratio because it doesn't have earnings. And if a stock doesn't have earnings, that means it's a growth stock and it hasn't proven itself yet, kind of like how Tesla was. But if you believe in the stock, then you can speculate and buy it before it is in fact green on the bottom line. So that's generally how you perform a tiny bit amount of fundamental analysis. But I'll do a deeper dive into how to read the 10K and the 10Q and how to understand the business and compare it to its peers and listen to the conference calls. That sort of thing. It's cash and cash equivalents, it's debt. Is it growing quarter over quarter? This sort of thing. But yeah, this has been the technical analysis video. Let me know what you guys think. I hope it's been helpful. Let me know if you guys want any further stock market education videos in the future that aren't just about what's going on right now or the trades that we're making. And yeah, let me know if you think this track is dope. We have a Discord, guys, where I call out all of my options trades, where I enter, where I exit. There's a 7-day free trial. It is $15 a month to join. But there is a 7-day free trial within the first 7 days. We'll be able to, I'm pretty sure I can make you or help you make a lot more than $15 on our trades. We're pretty, we have a put credit spread and call credit spread strategy, which relies on data decay and our analysis. But yeah, we're consistently profitable. You can check out my stimulus challenge videos to see if you think we're profitable enough for you. But it's a really great group, guys. I think you should join. The link, it'll be that pinned comment down in the description. Okay, make sure to smash that like button. It really helps out the channel a lot. Please hit the like button. Please subscribe. And, drop a comment. Say what's up. Alright, guys. That'll be it for me. Deuce.